The world watches with bated breath as the Middle East continues to simmer with conflict. While the immediate focus is on the humanitarian crisis and geopolitical tensions, there's a ripple effect that reaches far beyond the region. Today, we delve into the potential impact of this prolonged conflict on the Indian stock market and gold prices. India, with its strong ties to the Middle East, stands to be significantly affected by the unfolding events. It's not just about oil prices, though that's a key factor. The conflict throws a wrench into global trade, disrupts supply chains, and fuels uncertainty, all of which impact investor sentiment. Let's start with the stock market. In India, the stock market is closely tied to global events. A prolonged conflict in the Middle East could lead to a decline in investor confidence, affecting the stock market of performance. Why? Because investors are risk averse. When global stability is threatened, they tend to pull back from risky investments, seeking safe havens for their money. This can lead to a sell-off in the Indian stock market, pushing prices down. But the impact isn't just about sentiment. The conflict can have direct consequences on the Indian economy. So take the oil market. The Middle East is a major oil producer, and any disruption in its production can lead to higher oil prices. India, being a significant oil importer, would be directly hit by this. Rising oil prices lead to inflation, which can dampen consumer spending and hurt corporate profitability, ultimately impacting the stock market. Now, let's talk about gold. This precious metal has traditionally been seen as a safe haven asset during times of uncertainty. When investors fear geopolitical risks, they tend to flock to gold, driving up its price. The current conflict in the Middle East could very well lead to a surge in demand for gold, pushing prices higher. Why is gold seen as a safe haven? Because it's a tangible asset, unlike stocks or bonds. It holds its value even during times of economic turmoil. The conflict in the Middle East can exacerbate existing economic uncertainties, making gold even more attractive to investors. But the gold story isn't always simple. While higher demand can boost prices, the conflict's impact on global supply chains and the overall economy can also affect gold prices. If economic activity weakens globally, demand for gold, even as a safe haven, might suffer. This could lead to a softening of gold prices despite geopolitical tensions. So, the impact on gold prices is complex and depends on a multitude of factors. It's a delicate balancing act between the safe haven demand and the overall economic outlook. In conclusion, the prolonged conflict in the Middle East has the potential to impact the Indian stock market and gold prices in multiple ways. While the exact extent and nature of the impact remain uncertain, investors need to stay vigilant and closely monitor the evolving situation. Remember, these are just potential impacts. The actual outcome will depend on the duration and severity of the conflict, the global economic environment, and the response of policymakers. Keep in mind, investing in the stock market or gold involves inherent risks. It's crucial to conduct thorough research, consult financial experts, and make informed investment decisions based on your own risk tolerance and financial goals. Stay informed, stay invested, and navigate these turbulent times with caution and wisdom.